We also do a lot of business advisory services for our borrowers. We follow them through the life of the loan. We do a lot of educational programming also. You can see that on our website, which is primarily free, except for our multi-night QuickBooks course. And that is at weteachsuccess.org, or you can see it from our cedf.com website. I'll give you some literature here later in the evening. So we hope you'll take advantage of those things. I've had the honor to present here at the New Haven Free Public Library a number of times over the years, and we're glad to have them as a collaborator with us and vice versa. So tonight, because you guys are all enrolled in an e-commerce venture, right? We're going to talk about some record keeping, tax compliance, and some elementary pieces of financial reporting. When Paul falls asleep over here, we'll know that we've covered it all. So, tell me a little bit about the ventures that you have in mind at this point. And if you're with us online, you can just put it in chat, and Celeste will tell me the types of ventures you've got going.
So Cody Smith, and I'm Thomas Cody Enterprises, and my venture basically is just a meditation, mindfulness, lifestyle brand. Really, my goal is to teach meditation and mindfulness to people, but also the main aspect right now is really just the merchandise, clothing, t-shirts, hoodies, masks, and bags.
Okay. How long have you been in operation?
I just started a month.
Okay. All right. Any revenue yet, or are you still planning in the planning stages?
Yeah, I have some revenue.
Okay. Good for you.
Hi, I'm Anissa Ramirez. I'm a scientist by training, and I'm putting together a science-themed greeting card business.
Okay.
And brand new, so no income. You know, just got the EIN number like the other day.
Well, we all start somewhere, and that's where we start. Okay. And a science-based, it means like the messages and the.
Yeah. Just using science in the cards.
Okay. All right. Okay. Very good. All right, Paul?
Yeah, I retired 2 years ago. I've been in financial accounting position for about 44 years prior to retiring. I started a consulting business, and my specialty is really helping distressed companies, either finding financing or helping them to improve their profitability and efficiencies to avoid bankruptcy.
Okay, well, avoiding bankruptcy is a good contribution, that's for sure. Looks like T's back in. So T, what is your venture all about, please?
Wearable art, primary power, so clothing and accessories, men, women, and children. So everything I have on, for example, I made custom clothing, and now I'm at the point where I'm scaling up to ready to wear. Loading up product on my website to the store.
Okay, terrific. Great hat, by the way.
Thank you.
And didn't get to meet the gentleman at the end of the table, is that? Oh, she, sorry. Oh, okay. Oh, outstanding. Puma's been to my class before. Yeah, okay. Sorry, with a hat and the a mask these days, you don't know who's who, right? Okay. Well, let's plunge into it. Whichever way this wants to go. All right. Are we actually screen shared, or did we? I think maybe we started up.
I got the.
Yeah, but unfortunately, yeah, you can see the screen, but it's not advancing. So I wonder if we. Let's do this. Let's end the share and let's start it again. There we go. Okay, so see, we got two versions of screen share running here somehow. Okay, and will that advance? There we go. Okay. All right. So sorry for those at home. Always technology is a challenge. I wanted to take a little humorous view of what I call the evolution of record keeping, so you understand what happens to a lot of small businesses and kind of where you want to go, where you want to be on this path. So I call stage one the stage where you're just managing out of your hip pocket, which means if you've got money in your pocket, then you're feeling good about your business, which is kind of pretty rudimentary stage and is no way to run a business, certainly. Stage 2 is where you're more advanced because you actually have a business checking account, or maybe you're doing it out of your personal checking account, most unfortunately, which you should not be doing. Should have a separate business bank account. But when you're managing out of your checkbook, what that means is you feel good about yourself if you think you've got a positive balance. And that, again, is no way to run the business. Nowadays, no one seems to use checks anymore. They're only using debit cards. So I'm going to have to change my slide someday. No one's going to know eventually what a checkbook is. Stage 3, I say, is when you've advanced to the point where you've actually starting to do some bookkeeping, but instead of getting a competent bookkeeper, you get an incompetent bookkeeper because there's someone maybe in the neighborhood or some friend of a relative, and they're cheap. And then you suffer the pains of not really being in financial control because you don't have good information because things don't get put into the right categories and whatever. So that's another evolutionary stage that you go through. What's going on here, Celeste? How come we don't? You think? Oh, there we go. Okay. All right. So our next stage is when we actually get a competent bookkeeper. And it's terribly important because if you imagine that you're playing, some sort of sport, like a basketball game, and you know how the basketball arenas have these big scoreboards overhead? Well, what would happen if the power went out just on the scoreboard and all of a sudden no one could keep track of the game? You know, people keep running up and down shooting baskets, but you didn't know who's ahead, right? You know, that's kind of what happens in business when you don't have good financial record keeping. You don't know the score of the ball game. But when you've got a bookkeeper who knows what they're doing and they can provide you with the financial information on time, then you can overcome that problem. Stage 5, I say, is when you're a much more complex business and you've got professionals involved. Maybe you have someone like Paul who's in the organization as a hired employee. Maybe you've got an outside CPA firm working for you. So that's what you're going to aspire to someday when the business is complex enough. You're not going to need that right away for daily needs. But as I'll explain later, you do want to establish a relationship with a competent professional early on. Things are going to help your business. You're going to get business advice and you're going to get it done right. Okay, so record keeping is probably not a favorite subject, I'll say. Anyone here get into business because they just love the joy of keeping records and wanting to maybe do their own bookkeeping? Does it motivate anyone to be here? Probably not, right? You got into business because there's something else in the business that you want to focus on. And that's fine. You should focus on those things. But you're kind of like the pilot who's not watching the instrument panel. If you're not keeping track of the financial aspects, you've really got to kind of swallow hard and say, I've got to devote a certain amount of attention to this subject because otherwise my business is going to run out of control. So here's 6 reasons why you actually want to do it the right way, okay? First of all, you need to be able to know your cash flow. When I say that, I need the information to tell me whether I can pay my bills and, how much money I'm due from other people, what's my financial condition. And some people just manage to do this out of the hip pocket or the checkbook, but, we need to be a little more sophisticated. The other thing is that you've got customers and you've got to be able to make sales and you've got to be able to organize those sales. Maybe you need to buy materials if you're in a type of business other than e-commerce, but if you're in e-commerce, you've got to have inventory on hand, right? You have no inventory, you got nothing to sell. And you have to do a certain amount of planning because to make hats, for instance, how long does it take to get those hats from your supplier? Okay. I mean the hat that you'd make the art on. Don't you have to order that hats from somewhere?
I make
Oh, you do? Okay, all right. But you didn't, you got to make it out of materials, right?
Yeah.
Okay, and how long does it take to get the stuff that you want?
If you think of it like a shopping trip, maybe 2 hours.
Okay.
It's about 2 hours to make one.
Mm-hmm. But don't you have to know the day before, or the week before, the month before to have materials on hand to, if you're gonna have a certain amount of inventory you're trying to build to?
Yeah.
Yeah, so some planning is involved, and that's a good reason for record keeping. Because if you don't know kind of what you're gonna need, then you can't make the right decision. Anyone here selling in a marketplace like Amazon or Etsy or eBay?
Eventually.
Okay, all right. Well, if you don't fill the orders promptly, what happens? Okay, well, you're gonna lose business, but eventually they're gonna maybe disinvite you from being there if you promise that you're gonna deliver in a certain amount of time and then you can't fulfill those orders. So that becomes a bigger management problem. So, you know, having the production lined up properly is crucial. So you got to have records to be able to know what's going on in the business. That's what we mean by insight and decision making. And then anyone here ever intend to grow to the size where you're going to maybe go out to a lender and borrow money so you can have more inventory, bigger jobs, more sales? You want to be bigger than you are right now, right? Okay. Well, if you're going to raise capital, or if you're going to have a partner, okay, an investor in your business with you, they got to know what the score of the ball game is, right? Because you can't just offer a promise that you're doing good and expect that the lender or the investor is going to go along with it. You got to be able to show them on paper exactly what's been happening and what likely will happen in the future based on your plans. So raising capital becomes a huge need for good record keeping. And then finally, tax compliance. Now, no one likes to pay taxes, but would you believe that as a business advisor with my organization, as I've been for the last 9 years, I've seen situations where people don't do their bookkeeping properly and they actually overstate their sales. And can you imagine the embarrassment when they realize that they've paid too much in taxes one way or the other because they were double entering some sales. They had phantom sales that they were reporting. So, you know, simple things like tax compliance become, you know, a big deal if you don't do it right. And, you know, on the opposite side of this story, if you don't keep good records and you don't pay enough taxes, well, you know, Department of Revenue Services with the state of Connecticut may be at your door someday suggesting that, you know, we catch up, which is kind of embarrassing. Anyone want to tell me why we have a illustration of a blender on the screen over here on the far side? Anyone want to take a guess what that means? Yeah, not a good idea, is it? Right, so you throw the business in the blender and you throw the personal in the blender, and then pretty soon you don't know whose money's who. So everyone here either have or are planning to get a business checking account? Okay, crucial. So when you go out and you just maybe make a purchase of money out of your own pocket, you save the receipts? Okay, yeah, I mean, it's always best if you have the debit card or that checkbook, but if you're doing a cash thing, save that receipt, you know, even if it's just the parking garage, right? Because you want to be able to keep a good score. All adds up over time. Anyone here driving on their for business at any point? Okay, so have a mileage log, maybe a little notebook where you keep track of your mileage. Yeah, you want to get one because don't miss that trick, you know. It's a business deduction, you know, because it's you probably don't have a business vehicle at this point with you're using the personal vehicle, right, or a borrowed vehicle. Yeah, so you know, keep up with things like that because it's all useful. Okay, so what do we keep? hang on to all the bank statements. Does anyone still get actual paper bank statements from their bank? Or is everything online these days? Kind of push you toward just doing the online statements, I bet. You get both? Okay. All right, well, hang on to those paper ones. So if you don't get a paper statement, how do you keep track of that bank statement? Do you make a PDF off of the internet? Okay, well, you want to hang on to that. You want to put that PDF file, into a backup somewhere, because someday you may need to get in and prove to the IRS or someone, kind of what was going through the bank at some point. And people forget that online banking is not eternal. They're going to cut you off after a certain period of time, right? You can't go in there 2 years later and expect to find the January 2020 bank statement. That's a little unusual. Okay. If you're placing orders from a vendor, you have purchase orders, or if you're paying invoices to a vendor, maybe save the packing lists if you've got inventory that's coming in and you want to have records of what was actually shipped and received. All this stuff probably needs to be all clipped together, nice organized files in the office, and filed by vendor, filed by month. And then someday when you need to go back and check that information, it'll be there. But do you remember the picture of the out of control office here another slide ago? Yeah, that's what some people kind of have instead, and that's it's not a good way to get launched. Okay, we talked about cash receipts already. Tax returns, it seems obvious to me that you would want to keep the tax return after you filed the return. Because, well, what happens when the Department of Revenue Services or the IRS says, we never got your return? You want to be able to say, well, yeah, I got a copy, here it is. Maybe even the postal receipt if I mailed it in, although I know a lot of those are electronic now. Sales and use tax is the same thing. I can think of clients in the last year where someone was contacting the DRS because they said, well, you didn't file a return. And I said, oh, I thought I did. I want to be able to prove it. And, the DRS will give you a reference number when you actually make that filing. By the way, so who has an EIN here already? Okay. And who has, who's going to make sales of tangible property, physical property? And 2 of you. Okay. So do you have a sales tax registration yet? Okay. Is that on your list, T? Okay. So you're going to get registered, but maybe you don't have a lot of business right away. Don't think you don't file a return. You want to file a return even if it's 0, because they want to know that you're out there and you're alive. When you don't file a return, even if you didn't have any business, they take that as a not a good thing. And they'll come back at you later and they'll say, well, we figured you did this much, so why don't you pay this much? And you don't want to have that fight. Okay, so someday you'll have employees, and there's a bunch of employment records. That's the subject of a different seminar. Credit card statements. Everyone has a personal credit card here, and you save those statements yourself. Okay, well, some people don't. They just toss them, if they paid or whatever. But you're probably going to start with a personal card because that's usually what happens with a small business. Eventually, you get a business credit card, once you have a banking relationship established. Personal use of a credit card, or pardon me, business use of a personal credit card is not entirely a bad thing if you organize it properly, okay? And here's what I mean. If you can get yourself a second credit card that you only use for business and pretend it is a business credit card, then in effect, on a, let's say, a monthly basis, matching the cycle of the card, you want to be kind of turning in an expense report to yourself, okay? Does anyone here have a W-2 job where they've ever gotten reimbursed for an expense by an employer? Okay. And did you have to like put something on paper to get that? They didn't just hand you a check, right? Yeah. So imagine yourself turning in an expense report to yourself. Okay. You just make up a form or something in Word or Excel. But that way you got it on paper, you got those receipts attached to it, you know, you got that statement attached. And, you know, when you get ready to do your bookkeeping, you know, the entries are a little different, but still being organized enough to have that credit card statement records there. And again, segregated, personal, it's personal. This one is going to be the business card until I qualify for a business card. Okay. And then we have loans and legal documents. Maybe you're going to rent space someday for a warehouse or an office or something. You know, all that stuff needs to be kept, and they're all financial records in a sense because they all touch the finances. Okay. All right. So how long? It's kind of complicated. I've got it on your printouts, and if you're at home, Celeste will get you a copy of this at some point. But basically, it's 3 years on most things, plus the current year. The IRS wouldn't be the IRS if they didn't make it complicated. So there's some things that are longer, like 6 years if you don't report income that you should have reported. And of course, everyone contemplates not reporting income that they should have reported. So they hang on to those records for an extra 3 years. And then, of course, if you don't file a return, they think you should keep it forever, which is kind of funny. And if you're planning to file a fraudulent return, you need to plan, you know, in advance. Keep those records indefinitely because they're going to nab you someday. Okay. And then employment records, the IRS says 4 years. So hope everyone has a basement or a garage or a big closet, because all this stuff kind of takes up space after a while, you know, because you're going to have some things on paper. Okay. 6 years if you do not report income that you should report. It's basically, it's a gotcha. It's the IRS gotcha that says, well, look, some time has gone by here. It's been, you know, 5 or 6 years, and we went back in the records and we claim that your tax return from 2000 whatever was underreported. And you say, well, gosh, I don't have those records anymore. I threw them in the dumpster because it's been more than 3 years. And they say, gosh, too bad for you, because our rules say you should keep it for 6 years. So again, you know, just pointing out the complexities here. For most situations, an accountant will tell you 3 years plus current year. Okay, so what does it take to really be successful? So here are the things that we see time and again, and this is what I think the focus should be for your operations. Working from the top left, I really think that you've got to get yourself into a position where you can do forecasting and projections, as we call it. And that means being able to look ahead in the business based on the conditions. And then maybe with the help of a bookkeeper, maybe with the help of an accountant, you want to be able to say, well, what's going to happen next month? What's going to happen next quarter? What am I going to have in sales? What do I need to buy in inventory? You know, what are my expenses going to be? Am I going to be able to cover all that? And so you kind of develop a discipline of looking over the horizon. So life is not just a continual surprise to you. Can you see the value of a little planning there? Well, this is a lot easier when you have a budget. Who has a family budget for the household? It's not the most common thing these days, but you know, if you've got a more complex arrangement with children and others, does it help to have a budget, Celeste?
Yeah, I do have a budget.
Okay,
Yeah,
good for you.
So,
So, and I suggest that you put it on paper, that it's not just in the head of the owner, and that if you get that budget on paper, even if it's you know, kind of rudimentary in the beginning, it's going to help you. It'll help you do the forecasts, and it'll help you keep on track. Bottom left, it says prudent security. So everyone's well aware of all the cybersecurity problems these days, right? And all the things that can happen when you take your business computer and you go wandering in the wild west of the internet into the wrong sites where you might be downloading some things that infect your computer and then cause problems. Everyone heard stories about ransomware, I presume? Yeah. So, you know, there's all sorts of bad things happening, and probably not too long ago, people would say, gosh, I'm just a little small fish. Who's going to go after me? Well, guess what? You're the best target because you don't have any security on your computer, and you probably don't have the knowledge and awareness of what you need to do to secure. And so all these folks out in those foreign countries where cyber crime is a way of life find you to be irresistible because, well, you know, the library here has security, right? Municipal government here has security. They're not as easy to penetrate. Bank has lots of security. And you, on the other hand, may not have much of anything. So watch out where you keep your financial records and what you do with the computer and how well you secure it. If you have any questions about what you need, there's lots of, you know, responsible security vendors out there who can help. Okay. Working our way around, the bottom, it says reviewing financial statements. At some point, like I described earlier, you're probably going to have a hired bookkeeper. Anyone have plans here to do their own bookkeeping on QuickBooks or whatever? Okay, that's fine. That's fine. You know, you get familiar with it, learn how to run the reports. That's good. I will tell you that in 9 years of doing business advising, I have found a number of people that do their own books with QuickBooks. And it's shocking and amazing how many actually do not run financial statements on their own records to kind of see what the score of the ball game is. Part of that may be because they don't make all the right entries, because, you know, some concepts may be a little fuzzy to them. But what happens then is that you know, kind of the garbage in, garbage out thing, and then the reports don't make a lot of sense. And then because they're confusing, well, we don't run the reports because they're not going to read something that I don't understand, or maybe we didn't understand it to begin with. We actually have a webinar that we did somewhat recently on understanding small business financial statements. So if you go over to cedf.com, hit our weteachsuccess.org website, which links to it, you can look in the webinar section that we have. It's called replays, and then go back and look for that webinar on understanding financial statements.
I have some other people here saying, Lisa saying that she used QuickBooks.
Okay, very good. Good for her. So into the middle there on the right, we say, be sure you have a competent bookkeeper. Because when you get to the stage where you're in business, you're paying someone to do the record keeping, you want to make sure that they somehow know how to put things in the right bucket. And if you have a tax advisor, if you're using a CPA firm, hopefully, we'll get into that later, you know, they can help you confirm that your bookkeeper knows what they're doing. Okay. And finally, we end up with adequate financing. Have you ever heard the terminology, you got to have money to make money? Okay. Who has a dream of being out of debt completely? Well, I'm going to caution you. Unless you intend to close the business, you're probably always going to have some business debt. Why? Because if you intend to grow that business, unless you just say, you know, my business has done so well, I'm just going to like put it on ice, and I don't want to do anything anymore with the business. I intend to stay static, and I no longer need any use of capital because I'm not going to grow anymore. Well, it's a pretty unusual situation that you've accumulated so much profit that you're on your own 2 feet entirely. You always may have some use for some business debt, as long as it's manageable in a proportion to what the business produces. There's no shame there because you got to have fuel for the engine, right? So to say, I'm always going to be zero forever may not make sense for a small business. If you think you're done, then, well, maybe you don't need it. But not a lot of businesses reach the stage where they just don't need any more capital. And if you're doing so well that you've saved all of your profits, you didn't take them out of the business, well, good for you. Maybe you've got all sorts of internal capital, but pretty unusual circumstance, okay? So having enough financing in proportion to meet your goals, meet your objectives, that's what builds a successful business. Okay, so here's my advice from experience over the last 9 years. These are the 5 things that our most profitable clients have in their operation. We've stressed the up-to-date bookkeeping, a budget, what I call a revenue plan. That means sales goals, okay? Does everyone have expectations for their own business? You know, you wake up in the morning saying, gee, I want to do this week or this month or whatever. Okay, well, a revenue plan just means sales goals. So, you know, put them on paper and then, you know, you got something to shoot for. Everyone heard the term of KPI, key performance indicator? Okay, so what's a key performance indicator for your meditation business? Any ideas?
People actually implementing meditation into their life.
Okay, so maybe your client count. Okay, so it's one thing to attract a client and they may stay with you for a lesson or a period of time, but it gets to a stage where some of them fall away, right? And others, I'm going to say they graduate or they reach the objectives that you set. Okay, so is there a difference between this number and that number? Yep. Well, I mean, life is such that it probably is a difference, right? Okay, well, that ratio, that may be something you want to track. See, that's a key performance indicator is what my level of success is. If I can say that 75% of my enrollees get to this level, okay? If we were using, I don't know, a judo or a martial arts thing, and we said, but 75% of my students reach black belt, would that impress you? You know, if I knew that was a good number, I guess it would, but sounds impressive to me. I just made it up. But so that would be a key performance indicator for you. Okay. What would be one for a merchandise business? Do people buy more than one item from you at once? Okay. How many is typical?
Typically, so lately, been selling like 2 sets at a time.
Okay.
So coming from one.
Okay. All right. So if you kept track of all that, and then over time, you know, divided by the number of clients and the number of pieces, it might be some other ratio, 2.1 or something, right? Well, if you say to yourself, gee, I was at 2.1 last year, can I get it to 2.5 this year, right? And how do you do that? I presume you're interacting personally with your clients, right? And a little bit of conversational sales, maybe suggesting that this goes with that. Okay, so that's a KPI for you. Okay, any thoughts on what yours would be?
I guess I would have to do some analytics.
Okay.
You know, how long someone looks at the website and how if it leads to a sale.
Okay.
I think that's what I would have to do initially.
Sure. So maybe time on the site, for instance, the conversion rate, right? Because in a totally e-commerce business, and I don't know if you're going to have any cards in a card shop, but in an e-commerce business, it's all about the conversion rate, right?
Right.
You know, visitors, you can't pay an electric bill with a website click, okay, unless they click the pay me button, right? Okay. Anything going on there with Puma or any thoughts on this part? Okay, no sweat. Okay, benchmarking. Anyone familiar with that terminology? What industry were you in, Paul?
I was in juvenile products.
Okay.
Manufacturing and design.
Okay, a physical product like a crib or something as an example. Okay, So were you the biggest vendor in the industry?
One of the larger ones.
Okay. Did you ever look over your shoulder, see what the others were doing?
We did get benchmarking against our competitors.
Okay.
It's useful to compare whether or not you're, let's say, better or worse than your competitor.
Okay.
Obviously, you want to be the best in your class,
Right.
best in your industry. So if you look at, sales per employee, for example, which is a simple one, that will kind of give you an indication whether or not your employees are productive and if they're earning revenue per employee versus your competitor.
Okay. Good examples. Some of us are a ways away from having employees, but looking at what the competition is, and we all have competition. Okay. T's got competition because there's other places to buy clothes, right? There's innumerable places to buy clothes. Not just my clothes, just any kind of clothes is your competition, right? Most people can go naked. Okay. And you've got competition in terms of other mediums of meditation and things, that might attract others. And there's a lot of other greeting cards that might substitute for the messages that you're offering. Okay. So with benchmarking, I think it's important to be honest with ourselves. And there may be times where we want to say, I'm going to puff myself up and say I'm the best at what I got, what I do. But, we really kind of need to say, well, there's probably some things to learn from others out there. In some industries especially, the relationships between competitors are unusually close. And it will surprise you that in some industries, people are rather open with their competitors about what's going on. And I'll give you an example of the direct mail marketing business years ago. 25, 30 years ago, when everyone was getting catalogs, because there was no internet, the direct mail marketing industry was reasonably open with each other about technique and what worked and what didn't. One reason was they wanted to develop relationships with each other because they were renting each other's customer lists, because that was a good source of revenue once you had a thriving business. Other industries are pretty tight, pretty close to the vest, and you will not get close to your competitor because they'll shoot you first. But other times, folks are congenial and open, and you would be surprised what information you can gather. I don't know, Paul, did you ever go to the trade shows and kind of walk the floor and you talk to maybe other people in your industry that might be considered competitors, and maybe they would share, maybe they wouldn't. I don't know what your experience was.
Well, let's say you're not always welcome into a competitive group.
Maybe, but you might.
Many times you just
Sure. Okay. Well, that occurred, but there might be
no,
a.
they share information.
Yeah.
Because they're willing to share because they do want to improve the industry overall.
Yeah, maybe you're on an industry association at a trade show or something, and then you have more social interaction with some of those people, and yeah, you'd be surprised what they tell you, right? Okay, and the final thing on this list is using professional accounting services, because I claim that if you think your chief bookkeeper is going to do it all for you, and you're going to go and do your own tax return, you're missing out on some possibilities of good professional advice. Okay, want to grow that business, you're going to use an accountant and use him properly. Now, for the opposite side of the coin, here's 5 things that I would say some of our most unfortunate clients have demonstrated over the years. One is that they couldn't produce a credible financial report, so they did not know the score of the ball game. They showed personality-wise that they did not have time or a willingness to learn anything about either their own business or the business world around them. They found themselves too dependent on the business itself to make a living. Now, I think all of us get into business because we want to make some money, right? Is that fair? Okay, but when you are depending on the business to put groceries on the table for your child, you are in a rather risky situation. And that is not something that I recommend. Maybe you need to have another source of income to feed that child. But having yourself in a situation where the business must succeed in order for me to meet my personal needs, well, you know, it's not unusual, but it's also terribly risky. And then the next thing is when, let's say you have a partner and the business only works because you and your partner have teamed up to make the business either efficient enough or you combined your knowledge in order to be able to make the wheels turn. Well, what happens when that partner is no longer available? Maybe not willing to be in the business anymore. Maybe through illness or accident or whatever, they're just not going to be your partner. Well, now all of a sudden, can you continue? Can you hire out that knowledge that your partner was providing and that labor maybe that your partner was contributing? And then finally, some people are just in too much of a hurry to get the business prepared adequately. You know, maybe they have some money, they stake the business on, and they get the operation going, and then, to my great shock, they want to start taking money out of the company not too many months after they put it in to begin with, which is kind of like the pioneers in the old days, you know, eating the seed corn, you know, before the winter comes, and then, you know, before the business has grown to enough of a substantial level. Okay. I told you earlier that WeTeachSuccess.org has a lot of opportunities for you, and you could read the top there if it wasn't blocked by my.
Yeah, it's not blocking the.
Not blocking.
No.
They can see that there.
We can.
I wonder what it says. It says learn small business financial fundamentals for free. I have a course there where you can go into greater detail, and we also have the webinar that I referenced earlier. Okay. Okay, let's talk a little bit about tax compliance because that was one of the promised topics. So as I count them, there are 7 major categories that you've got to be conscious of for paying taxes here in Connecticut. So anyone think they're going to have an employee in the next year or so? Okay, I see T's got some plans, all right? Okay, so you've got some obligations when you hire that person. We'll talk more about some of those obligations here in a minute, but if you're going to have them on payroll, which you probably should, you're going to have a need to track the withholding tax, both on a state and a federal level. That's Social Security and the Medicare and the federal unemployment tax. Everyone here had a W-2 job with a paycheck stub, I presume, at some point? So you've seen all those deductions when they've been made on your behalf. Well, you know, all that information gets filed in returns for the IRS and the DRS here in Connecticut. As of a year ago, and a year and a quarter, Connecticut now has a paid leave law. And there is an organization called the Paid Leave Authority, and you've got to make a withholding out of employees' paychecks and send that fraction of a percent off to the Paid Leave Authority so that when the day comes when they need to take paid leave, they can draw on it. We have a state unemployment tax, which is entirely different than the withholding tax. That gets taken care of by the Department of Labor. And when you're going to have employees, you're going to go to the Department of Labor and register for an unemployment tax number. And if you don't, they will find you and fine you. So be sure you do that. Workers' compensation insurance is required anytime you have employees. So that can be handled through a payroll service company, or you can go to an insurance agent and you can get a hold of the appropriate workers' compensation policy. But crucial that you have that in place, because when someone falls off the ladder, you don't want to be sued. You want to be able to take care of the medical needs if someone has an accident at work. It could be simpler, you know, maybe they just, they're meditating and then they sprain their back and can't get up, right? Or they they're packing things for you for shipment and they get a paper cut, you know, arterial bleeding from a paper cut. Everyone here located in New Haven? Okay, so the towns in Connecticut have a business property tax typically, and there's an annual tax return that you file to declare that you don't have a desk and a computer and a file cabinet and maybe not too much else, but still, you're supposed to file that business property tax return and pay your fair share. We've talked about sales tax already, and we're going to talk a lot about out-of-state sales tax, because I presume if you've got an e-commerce business that you have some hopes of selling to people that don't necessarily live in Connecticut. Would that be right? So we'll make sure that you get that information.
Sorry, where do I get information about the business property tax?
Well, the city of New Haven would have a tax collector's office, and I'm sure they'd be delighted to send you the forms.
They usually send like a booklet.
Okay.
Well,
Every town's a little different.
For example, they send a booklet. And you put all stuff.
Okay. So yeah, and if you're in a smaller town, it might be a little more informal. You just go by the town hall and have a form. Okay, so now we need to talk about e-commerce sales tax, because it's an increasingly complicated topic. And it's going to be particularly important for those that are selling a tangible piece of property like tea and and the greeting cards. So I think we tried to lay out the basics here with the example that buyers pay, but sellers collect and remit. Okay, so just for clarity, you don't pay sales tax, but you have an obligation to collect the right amount of sales tax, whether it's in-state, sometimes out-of-state, we'll get into that, and then turn it in. Okay, what happens when you make sales and you forget, oh my goodness, I forgot to collect the sales tax? Do you think that the Department of Revenue Services will say, gosh, that's okay, it happens all the time. Well, just be sure you do it in the future. That's not what they do, right? What are they going to do? They're going to say, well, how much was your revenue? And let's just do a little estimate on what you didn't pay. And then we're going to add some penalty and interest and we'll get square. Okay. So your obligation to yourself is to make sure you collect what's due. Okay. Because otherwise they're going to take it out of your hide. Now, a little bit more about tax law than you want to know. Back in 1992, there was a court case, national court case called Quill Corp versus North Dakota. And the decision was, well, at the time, if your business doesn't have any physical presence in that state, other state, then there's no obligation for you to collect sales tax from people in North Dakota when they buy from you greeting cards or hats or what have you. All right, and so that went on all the way from 1992 to 2018, at which point there was a different Supreme Court take on the thing. And this is called South Dakota versus Wayfair. You notice this is all taking place in the Midwest, where it's not a lot of population, but there are people doing mail order or e-commerce business, right? So why do you suppose the state of North Dakota or South Dakota was interested in suing these companies? Because they figured that someone was, kind of, how would you say, taking business from their Main Street retailers, and they wanted to get a piece of the action for their taxpayers. Okay, so in South Dakota versus Wayfair, we came up with a different standard. And to boil it down, you got to have 200 transactions or $100,000 of business, at least in this court case in South Dakota, before you had an obligation to go and collect. Okay. Now, everyone's bought from Amazon at some point, I presume. Paul, I'll pick on you because you've got the grayest hair besides me. When was the earliest date that you maybe bought something from Amazon? Can you remember back in the wild west of the internet? Oh, okay, so that's not going to count.
95.
Okay, so did you pay sales tax that time?
Remember.
I bet you didn't.
Okay.
Because I bet you at that point we were still under the Quill Corp Nexus rule. And I bet you Amazon did not have a warehouse in the state of Connecticut. Now they have 2 or 3 at least, I think. They got a physical presence around every street corner these days. So things have changed. But back then, you would have bought from Amazon. You probably would have bought with glee because you didn't pay any sales tax, right? You realize the state of Connecticut was still expecting you to put that on your sales tax or on your personal tax return at the end of the year and pay something called use tax. Yep. Okay. And if you go to your personal tax return, when you do your taxes this year and you look at the form very carefully, there'll be a line there where you can declare your use tax. And your use tax is any tax that you would have paid to Connecticut, except for the fact that you ordered your product from someone who didn't charge you from some other state. So with, I'm sure, supreme integrity and honesty, you've kept perfect track of all those transactions where you might have paid 6.35% sales tax, and you are declaring that to the state. Okay. Nowadays, we have something called a marketplace facilitator. So everyone knows what Amazon is. Everyone probably has heard of eBay, and everyone knows Etsy. I bet T knows Etsy because that's probably a marketplace he would want to use for custom artisan-made clothing, right? So these organizations have basically contracts with you as the sellers to sell the goods, and they will facilitate the collection of sales tax for you as part of their services, okay? Because they take a cut of your sale, right? Okay, so these marketplaces take care of the sales tax for you. But there are other situations. On the next line, it says Shopify or BigCommerce or Magento. These are organizations that are not marketplaces. All they do is they basically get you some software to be able to run a website, and they don't touch the sales tax. It's up to you to be reporting sales tax when, in fact, it is required. We're going to send around a couple things here. I have my small business guide to e-commerce sales tax, and that's a little map there, and gives you some of the rules for different places. I bet, you know, for the time being, most of you are not going to have any obligations. But you want to grow, you said, so someday you probably will. There's another form here, or sheet from Shopify, stapled in the wrong corner, I apologize. But there's a handy little table there showing all 50 states and the District of Columbia and how much business you got to do before they think that you're supposed to be filing sales tax returns. By the way, there's services that do all this stuff. You don't have to file 50 sales tax returns. That would be nuts, right? So that's the way it works these days. And I've got a little dissertation here on Shopify is not a marketplace, so what is it? And it explains the difference between a marketplace and other kinds of software. So this one's for Celeste. Yeah. Yeah, and then these can go around. Celeste's going to keep her copy because she's going to send it to anyone who is online. Okay. Any questions about sales tax and e-commerce that come to mind at the moment? And if you're a service provider, you might not have to worry about that at all. but you said you're going to have shirts and things, and so that's tangible merchandise. Paul might end up with a hybrid of that, because there may be some states where they go after some services with taxes, and if he has a big enough client someday, it may be something that he runs into. Okay. Anyone here do their own personal income tax return? Okay. All right. Well, no shame. Some folks do it through do-it-yourself tax software. Anyone here using TurboTax? Okay. All right. And so how does that work? You start up the software and what happens? Okay. And what happens if you don't understand the question? Okay. And what happens if you didn't understand the question, but you gave him an answer anyway? Well, maybe, yeah. So, you know, the tax software is getting more sophisticated on a do-it-yourself basis. And for a personal return in a simple business situation, you know, maybe it's a place to start, but there is the risk that you don't necessarily comprehend and answer the question correctly, and therefore you don't provide the right information, and you don't end up with an opportunity to have a highly accurate return, okay? So then we have things like H&R Block or Liberty Tax. Anyone seen the Liberty Tax people out on the street with the costume? All right, anyone ever use a national service like that for tax return? Okay, well, those folks get a few weeks of training. So, you know, maybe it's a step above do-it-yourself, but, you know, you're kind of limited as the business gets more sophisticated, how good a few weeks of training is really going to do for you. So we got to think that through. Then we have what I term bookkeeping and accounting services. So some bookkeepers kind of on the side do some taxes at tax time. And their experience is based on, well, whatever experience and expertise they have. And if they're doing bookkeeping for a living, maybe they don't have as much education and technical information as you might not need, or as you might need. So we're going to go up a step now to what I call the degreed accountant. And that's probably someone who works for a CPA firm. Okay, maybe they've got 4 or 5 years of accounting bachelor's or even a master's degree in accounting, but they didn't pass the CPA exam. And you know, they work for a living doing taxes and probably other accounting during the year, but they got a degree. Okay, so that's a step above. And then we have a term called enrolled agent. And there's about 1,000 enrolled agents here in Connecticut. This could be, you know, any one of the previous categories, but they've passed an exam with the IRS. There's a big, heavy 3-part exam that take a few months to study for. And they are allowed to represent you before the IRS because they've passed that exam. So an enrolled agent is no slouch if they pass the exam, right? And then we get to the stage of a certified public accountant. Okay, so that's someone who has, that 5 years of college in accounting, has done basically kind of that apprenticeship working for a big accounting firm, so to speak, and has passed that rigorous exam. And they are certified with the state as a public accountant. And then finally, we have a category called tax attorney. And tax attorneys, you're probably never going to meet because you're probably never going to be at risk of criminal prosecution for something you did with your taxes. But interestingly, the tax attorney has got to be an enrolled agent also. And, you know, because they've gone to law school, that doesn't qualify them to represent you before the IRS. They actually have to have the technical knowledge, and that's what the IRS requires. So do you see the differences in the levels of expertise here? And as you get more sophisticated with your business, you want to reach for professional services that become, more and more appropriate to your needs. But if you have a good relationship with the CPA and you use them correctly, in my opinion, you're going to get the best value because you're going to get business advice from them also. The person who just goes and drops off a grocery sack full of receipts on the 14th of April, that would be tomorrow, right? Yes.
We have till the 18th.
Oh, the 18th this year, that's right. Okay. All right, so you'd be at your CPA's office on Sunday afternoon with a grocery bag full of receipts, hoping that besides filing an extension that you get it all done that way. But the CPA doesn't like to see that. But usually those relationships aren't very deep. It's like, well, you can come back next Friday and pick this return up for my secretary, and we'll see you next year. That's not a good basis for a relationship. You want to have someone who's learning about your business, who will give you advice, who you're going to spend a few $100 on maybe to have a consultation, come summer for tax planning. Okay. And if you're listening, if you're curious about growing that business, maybe this person is a good advisor for you. Is that a question or just signaling here? Okay. Okay. So I want to give you a couple of warnings. And this is what I call the two most common small business mousetraps. So when you start having employees or you start making sales, you are going to have some money in your possession that doesn't belong to you. Because when you have a deduction for Social Security, Medicare, or the tax withholding, you got to send that in, right, to the state or the IRS. But you don't have to do it like this minute if you're filing your own returns. There's a period of time based on the size of the filing, maybe at the end of the month, maybe at the end of the quarter even. And what businesses will do, naughty, 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 is they use that as working capital until they're like obligated to send it in at the last minute. And this is a very dangerous proposition. We always suggest that instead you get a payroll tax service, not only to take care of all the paperwork for you, but it disciplines a small business because they're not going to do that return unless you've got the money in the bank account, to draw against for those taxes. Okay, so they're going to make you do it the right way. Okay. Kind of works that way in the sales tax also, is that, the state will not, it's not going to require you to deposit the sales tax the day after they make the sale. It's a monthly thing, or, could be even a quarterly thing, I guess, for businesses that have very low revenues. But, playing with the state's money as working capital, not a good idea. So you want to segregate that either mentally, or, some accountants even suggest you have a separate bank account to put these things in, because they know some of their clients, it's like putting cookies in front of you. You're going to eat it. If you got it there, you can't keep away from it, right? So on the other side of the page here with the little executioner, we have 1099. Anyone explain to me what that is all about? Well, could be a contractor. Yeah. So maybe not a contractor. That's the problem. Okay. So, and we didn't mean building contractors, although they are notorious for being in this situation. So here's what it is. People want to minimize expenses as a business gets going, right? And so we decide that, well, it's a lot of trouble to hire employees and do all this payroll tax stuff. So I'm just going to make you my contractor, okay? And so I have my magic contractor wand, and I will deem you to be a contractor because that's what our deal is, okay? And you're no longer an employee because I said so. And so you're going to take care of those income tax things yourself and your workers' comp yourself. And does that work for you? No. You shouldn't agree to anything like that. But the problem is that's what small businesses tend to want to do because they don't understand the law. In Connecticut especially, we have a very strict interpretation of who can be a contractor and who can't. And the best example would be if you are directing someone's work and you are providing the means to do the work in your facility and they got to show up on a schedule, then they're probably an employee. And the IRS, if you go out into the internet, you Google IRS 20-point test, there's a whole booklet that lists a lot of factors, and it'll explain to you situations where you very likely are in trouble already because you thought it was a contractor, but they're really an employee. Usually they're an employee. So don't get caught in that because the penalties after the fact can be even up to $300 a day, according to the law, for misclassification. And there are some industries that are notorious for doing this. Construction, the beauty business, okay, nail salons, hair salons, and so forth. So the state has done a number of campaigns on these industries to try to get it cleaned up. But a 1099 worker, you know, might really be a contractor, okay? Anyone ever had like the plumber come over and fix things? Okay, so did that guy have his own business? He have his own insurance? Does the truck have his name on it? Did he work for other people besides you? Okay, so that's more like what a contractor is, right? Okay, on the other hand, if let's say you were a building contractor and T's gonna work for you and T's gonna hang drywall for you. You ever hung drywall, T? Yeah, it's hard work, isn't it? Okay, and so you're working for this gentleman 40 hours a week and he's got a lot of work and that's all you do. And you're using his tools maybe, okay? And you don't have your own insurance. He's got insurance because he's a general contractor. You see, that's should be an employee, don't you think?
Unless he give you a t-shirt too.
Yeah, be sure you get the t-shirt by all means. Okay. Any questions about?
On the opposite side, if
Yeah.
you do hire some contractor, what value do you, like, so let's say that you hire someone a couple of times, when do you have to issue a 1099? Is there a certain amount that?
Well, if it's an individual, it'd be $600. Okay, let's say that you hired someone to do graphic arts for your greeting cards.
Yeah.
Okay, and they're a sole proprietor. Well, that'd be $600. Okay, they're an LLC. There are a number of circumstances where you don't, but you would kind of have to know how they're filing their taxes, whether they're filing as a corporation, which is much more complicated than we're going to get into. But typically, payments over $600, you're going to need to do the 1099s. It's a piece of cake. You can get the forms off the internet, and type up a few, or there's systems for doing all that stuff.
That's cumulative, like at the end of the year or whatever.
Yeah, in the calendar year time period. Right. Mm-hmm. Okay, so we're going to touch on the language of accounting to further make your head spin and to bore Paul to death here. Or maybe he has fond feelings for all of these terminology.
Okay. Very fun.
Yes, so you don't have to memorize any of this stuff, but these are pieces of terminology that you'll run into. The problem is that I don't have enough time to give you a significant educational experience tonight in accounting, so we're not even going to try. We're just going to hit the highlights here. But why do you want to have good financial reporting? I'm going to repeat. Well, you want to know about your own business, don't you? And you want to know how much money you're bringing in, and you got to know how much you're spending. And doesn't everyone want to know whether they're making money or not? Okay. And how much cash do I have left? And what do I owe other people? And ultimately, what is my business worth? Okay, well, these are all reasons for having financial discipline and being able to prepare standard financial reports, because all these questions get answered in these areas, which we're going to deal with the definitions of. So accounting sounds like something complicated, but it is fundamentally simple of just putting things in the right bucket as the transactions occur. And if you learn your own chart of accounts, which an accountant can help you set up, or even QuickBooks will help you set up automatically based on some questions, you will learn, eventually what goes in which bucket. I'm just going to hit the highlights here, as I say. A balance sheet. Everyone heard of a balance sheet, I presume. Okay. So interestingly, small businesses tend not to use balance sheets, to their own shame. As a business advisor, sometimes we go to a meeting with a client and they provide an income statement or profit and loss, and they don't touch the balance sheet. If you go to the bank asking for a loan, the balance sheet is the first thing the banker wants to see, because that explains the financial health of the company. Okay, people tend to focus on the profitability of the company, but it's a different question than the financial health of the company. Okay, this is what a balance sheet tells us. And by the way, my favorite illustration in this lecture is it's about learning the names of the animals in the zoo. Okay, and so if we can do that, we get familiar with the concepts, and then ultimately we get conversant, not only understanding how to keep score in our own business, but being able to talk to the accountant and know what he's talking about to us. Okay, so balance sheets really track three things. You see them over there in the left-hand column: assets, liabilities, and what we call equity. And we split those up into kind of current aspects and longer-term or fixed aspects. Okay, so every business has what's called a chart of accounts. And these are those buckets that we were talking about. And so we'll explain kind of what goes into each here. Assets are things we own. What's the best asset of all? Cash, absolutely. Anyone think of anything better than cash? Don't say Bitcoin. You can't pay electric bill with time, can you? Okay. What's the second best asset? Yeah, because people owe you money and you might be able to collect that faster than anything else. And it kind of goes down the list there. Maybe your inventory is pretty good, but it takes you a while to sell that, right? And turn it into cash. Okay. And then when we get into the fixed assets, like your file cabinet and your chair in your office, what are the odds that you can turn that into cash in a hurry? Yeah, pretty slim. So fixed assets, we don't consider liquid. Okay. On the liability side, we're going to have what's called accounts payable. That is, the bills that we got to pay right away with this month. Okay. And then more complex accounting is going to keep track of things that, we accrue as future expenses, perhaps. I'm going to skip over the details here for time-wise also. And then we have things like sales tax and maybe a loan to the bank and notes payable. Well, those things got to be taken care of, on schedule, right? Okay. When we take our assets and we subtract our liabilities, we get what's called equity or net worth, what the business is worth. Okay. And that's what it's worth on paper, because the reality in the marketplace likely entirely different based on conditions. But that's the simple formula for a balance sheet. Okay.
What are your examples there?
Okay. Everyone's going to have a capital account. You're going to stake some money probably to your business to get started, right? That money will be sitting in your capital account on paper. You'll probably spend that money for stuff, but that's your initial investment. We're going to keep track of that. Okay. And then someday, as the owner of the business, you may withdraw some capital. Okay. And if you are not able to be an employee of your own business under the tax law, whenever you take money out of the business, that is you withdrawing your own capital, which, as you think about it, might not make sense in a lot of cases, right? Let's say I save up $10,000 to start my greeting card business, and then come, the summertime or the end of the year, I want to take 5,000 out because I want to go on vacation. Well, does that really make sense to withdraw capital after I put it in? I don't have use of that capital anymore. So people tend to do things like that, unfortunately. And then the retained earnings is the way we keep score based on how the business did last year. Okay, so a very high level view here, but if you're going to hear these terms talking to an accountant or a bookkeeper or seeing them in your QuickBooks, you want to be a little familiar. Okay, and then we have an income statement, or what people call a profit and loss. It should be called profit or loss. And this is where we're going to keep track of our revenue, which is primarily sales. Well, technically, it could be some other things, other kinds of organizations. And I like to split it up between service and product. And we have in front of me a gentleman who would do the very same thing, because it doesn't make sense to kind of commingle those in the report, because you couldn't tell kind of how you're doing, right? You need to know, how much we're getting from each category. Then we have, by custom, a little calculation called cost of goods sold. And we're going to figure out what we spent to make all of those sales that we wouldn't spend unless we make another sale, okay? So for instance, the money we put into the merchandise to create the merchandise is your cost of goods sold, okay? Into other industries, cost of sales would be Paul's terminology if he was only doing service, but that may be rather limited, because if it's your own consulting time, you may have what amounts to 100% gross profit, right? Because you don't really have anything that you're selling, besides the lead that comes out of your pencil or whatever. So less complicated in his situation maybe, but knowing your cost of goods sold and knowing it accurately is crucial, because you guys got to be able to know gross margin. And if you don't have enough gross margin, that is profit margin, or what that gross profit is, you can't really know kind of where you're headed in the business. And if you're not charging enough, doesn't matter, how tight you are with expenses, you may not have anything left over at the end, right? Okay, so then our expense categories are all the things that you would be familiar with. So that's profit and loss or income statement. Anyone have a question remaining on that, perhaps?
The only thing that you may want to add is that the balance sheet measures the assets, liability, equity at a point in time. So as of a specific day, the income statement typically measures your profitability or loss for a period of time.
Right? For a quarter or a year, perhaps, right?
Or a month.
Or a month. One thing I'll say about the balance sheet, I'll phrase it a little differently. Yeah, it's run in a point in time. And when you're running them both, you want them run for the identical period of time, otherwise they don't make sense. But a balance sheet is actually cumulative, telling the history since the inception of the business, because it's everything you own as of this date, but it's all those transactions that have occurred since the beginning that got you there. And again, with the equity, her question about the capital account, you may have put that 10,000 in years ago, but if you haven't taken any money out, it's still there since the inception of the business. So dates are important, especially when you're running them in QuickBooks to make sure they match up. How is this organized? If you've got an actual report in front of you, it's revenue, expenses, and then you calculate what everyone's familiar with. Net profit is the bottom line. Everyone's heard of the bottom line, right? That's what you're after. Okay, this is the way it looks. And then it gets presented like that. We're going to skip over earnings before taxes, interest, depreciation, and amortization. You'll hear about that if you read business press. And then on the balance sheet, as we said before, it's what we own, what we owe, and what we're worth. It's our time.
It's almost 6:57.
Okay. And this is how the balance sheets are organized. You'll see that on your printout. And let's fly through some of this. I want to get to one last thing. We're not going to have time to delve into too much. The word cash flow I want to talk about. There's different meanings for the term cash flow. This could be just a financial term, and the definition is what you see here: resulting revenue or expense generated by business activity over time. Sounds like something an accountant would say. But it also may mean a report that is projecting the beginning and the ending cash balances of the business when you're going to get a loan. It's a terminology we use at CEDF. We're asking businesses to run cash flow projections. Tell me what is going to happen over next year or the next 3 years. And then finally, there's an accounting report called the Statement of Cash Flows, or Statement of Changes in Financial Position, I think is the way it's described elsewhere. And that will tell you kind of, it answers the question that many small businesses ask their accountant in tears: if you're saying I'm profitable and I owe all these taxes, how come I don't have any money in my bank account? It's because you spent it on stuff. Maybe you spent it on relieving liabilities, maybe you bought assets, but that's not the way we keep score entirely. We got to know about both reports. Okay. So there are ratios that you'll see on your sheet. You can look them up on the internet. It tells you kind of how the business is doing based on what's going on the income statement or the balance sheet. And there's a lot of other stuff to measure in an e-commerce business. I'm listing some of them here, and some of them are terribly important to you, like shopping cart abandonment rate. How many people think they want a greeting card, but they decide not to buy? Okay. What's our conversion rate? We talked about that earlier. What is the cost of getting another customer? Okay, when we because you know, the internet seems like it's free, but it's not free, right? You got to advertise in one way or another to get your business drummed up. And the other key question is, how long is that customer going to stick with you? What is the lifetime value of that individual relationship? Okay, average order, gross margin. There's about 61 other things. So the internet is full of this information. So any residual questions here? Because I think we used up our time, right? Anything come to mind? I will leave you a business card in case you have further questions.
Very well done. Thank you, sir.
And to hear from any of you, if you have any needs in the future.
Thank you.
Thank you.
Thank you.
Anything from the internet world?
No, but I can say,
I'm sorry?
I said, I'm thinking a service business is the best thing.
Why is that? Well, I mean, you don't have a lot of investment in greeting cards.
Yeah.
You are a service in a sense because you're transmitting a message for people, right? Okay. You're not buying envelopes and taking them out to Hallmark and hoping they're going to buy the card, right? So maybe you are a service rather than a tangible property under that condition. But on the other hand, you may want to sell some logoed gift items also, right? So.
we don't have any questions here, so we can use the
Okay. Do it.
in the internet, in the chat, and I will end up these and we can finish the discussion here.
Okay, very good. All right, I'll stop my share. You want me to shut down internet here also? you said?
Yeah, if you want to say bye.
Okay.
Everyone. Okay.
So I'll just type my goodbye. Okay, hope it's helpful to you. And you
Can you recommend a text?
a textbook?
Yeah. Okay.
on which aspect